What's up, guys, and welcome to the weekly Forex forecast. A lot of things ahead of us this week with the main focus on what is coming fundamentally speaking. If the last week was quiet, this week should be more volatile, or at least begin the next wave of volatility. Maybe by end of August, second part of August, and preparation for September, where the Federal Reserve, according to many analysts, should be able to cut the rates. Will the Fed be able to cut the rates? We should get this answer this week. And why is that so? Because this week we will have a very important flow of data: CPI, PPI, and retail sales. Inflationary data to show how the economy is recovering or not, what sort of pressure there is, and what would be the odds that the Federal Reserve would actually be able to cut the rates in September. Watch out this week starting from Wednesday. The first instrument for this week would be gold. Gold is on decisive moment, decisive zone. Not only the gold, but gold, I think, represents the market the best way. Why is that so? Take a look what we have on the weekly chart, on the daily chart, sorry. From one side, we are on top of this range. Break above this range could lead the gold to cross the 3,500 and make another high. This is a very, very, very high probability scenario. In that case, if we see the new high, watch out for the bearish divergence scenario to complete. Higher highs on the chart versus lower highs on the MACD would eventually put the pressure on the gold and to start and build up this divergence and to start to build up the next reversals and the big reversal signs. On the other hand, we could look at that as the most recent uptrend line breakout and now being retested. And if we manage to hold this zone of resistances, of supply level, restart the momentum by making lower highs, lower lows on the 4-hour chart, that could open the doors for the drop to the next lows, 3150 and 3000 levels. In that case, if we drop to the 4-hour chart, that's what we will want to see. Okay, so if the because right now, take a look where we are at. These highs and this high are being retested. The most recent resistance is holding. So if we restart by making the lower highs, lower lows here, that should open the doors for the next drop. 3150 and even below that is the first legit target level in that case, and 3000 zone from the daily lows could be the next level. If the bullish direction is the one that takes place, then the break of this range could lead the gold for the final rally until it will actually manage to go and complete the bearish divergence and then look for the sell-off. By the way, why at all am I looking at a sell-off on the longer term? It all starts with the monthly chart, where we are in a clear overbought conditions. RSI is way above 80. Last time that happened was here, and we all remember how it ended. I'm talking about, of course, the period of 2020. Before that, we saw the RSI on 80 here. Before that, here. In all of these cases, we saw the market slowing down and preparing the reversals, and I don't think that this case would be different. That's why I believe every rally here, if happens, should be limited and should prepare the ground for the reversal. And if I manage the gold is in decisive mode, take a look on the S&P 500. That's no difference. Take a look where we are at with the S&P. We are building up a sequence of higher highs, higher lows. The MACD already prepares while the market makes the higher highs. MACD is making lower highs. This by itself is a sign that a potential reversal is building up. It happened before that here. During September throughout December of 2024. before it opened the doors for a major bearish move. And I don't think this coming case would be different. I do think that this rally is limited. I do think one more high, maybe even beyond that, is possible. Currently, the bullish momentum is there. But once it ticks and once we start to break the lows, that could open the doors for major correction. And that's exactly what I would be looking at. Last week, I was looking for the break of that trend line and the break of this low, which never happened. And right now, the S&P is still moving within this channel, I would say, or tunnel, right? But as we know, in such cases, while it is moving in a bullish channel, but countered by bearish divergences on higher time frames, most of the time this is a preparation for the reversals. So fake highs, if we create fake highs, watch out for lows, break of the lows, and that could open the doors for the next sell. Until that happens, the buyers are in control and they could push the S&P to make new highs on the 4-hour, daily, and weekly charts. This week, with the inflation data, and in that case, how could that affect on the euro dollar? So euro dollar is one of my favorite, to be honest, for the coming several weeks. The reason is because the euro dollar right now is in between broken support that became resistance and the last high that acts as supply. And there are two scenarios I personally follow for the euro dollar. And here they are. We can see that on the bar chart, but we also can see that even better on the area chart, which you can change right here. So take a look where we are at. At the end of the three waves on the euro dollar, we start to see the price rounding. Yet that is a powerful sign where the buyers are losing the control. MACD already had a bearish divergence. While the market was making higher highs, MACD moving average making lower highs, and so does the RSI. These are great signs. And that usually means a reversal or corrective structure is coming in play. That could be two options. A, B, C, D, which means two waves down or a range. If we take a look, we could say that there was A, B, C, D, but usually it's too small because the corrective structure tends to be in the length of the trending structure, or at least half of it. Right now, it's not there and not there. So what does all that mean? As I said before, we have this week inflationary data. We have the CPI, PPI, and then on Friday, the retail sales. That could or boost the dollar or the anti-dollar move. If it's the anti-dollar move, and let's say the inflation data shows further improvement, that means the chances that the Federal Reserve will cut the rates on September and the following months would be bigger, would increase. In that case, we would expect the euro dollar to climb towards the 121, 123 area, retest the sequence, the trend line that connects the highs of this uptrend and this channel, and then probably another high on the MACD, and from there a major reversal. Okay, but what happens if the data is not good? If the data is actually in favor of the dollar, and then the chances the Federal Reserve will be able to cut the rates for several times starting this year would decrease. In that case, the euro dollar is expected to continue its move down. Now take a look at the interesting part. If this low was already tested, the next lows were never tested yet. And if the data comes in favor of the dollar, these are the exact lows, 113, then 111, that we could see the euro dollar actually making. And if we plot Fibonacci here, retracement on this movement, we would see a very interesting case. Not the 38.2, not the 50 were yet tested on this corrective structure. So if the data comes in favor of the dollar, we should be able to see the 38.2, which is around 112, then maybe even below the 111 I mentioned before, the 50% is around 110. And there is a great chance we would see these levels. Alternatively, of course, if we see the new high being reached first, the 121, 123, then from there, this is the zone, right? Then from there, we could expect it to retest the 114 down to 111 I mentioned before. So watch out for the euro. I think this one should be one of the most interesting opportunities on the coming several weeks. The final one for today, the Bitcoin. And the reason I want to cover Bitcoin is because recently I've asked a lot, Vlad, do you think the Bitcoin is going to cross the 125, reach the 150, maybe even 200 by the end of this year? And I, as much as I am in favor of the crypto change, Bitcoin and all the others, I have some concerns. And I believe that while all this money flows right now due to the expectations of 150 and 200 to be reached, there is a great chance that the next rallies that will eventually, of course, bring more money of those who miss the party would be actually traps. And the reason I think so is very simple. Look on the weekly chart. We have a sequence of higher highs, higher lows, but on the other hand, lower highs on a moving average of the MACD and RSI, which usually means a bearish divergence is building up and sellers are going to reject. Last time it happened was here during 2021-2022 period, this bearish divergence, and we all remember how powerful the move down happened to be afterwards. It happens to be the end of the three waves, and that makes me think that a correction is not too far. And if we go to the daily chart, we have a very interesting case scenario here. We have two waves, which usually means one more, maybe even two more are coming, but watch out for a couple of scenarios. First of all, this is a very possible wedge, which means this rally here could create double time frame divergence weekly and daily at the top of the wedge, and from there look for a fake high, fake rally, break down below the recent high, could be a great sign of a false breakout and a major reversal. Major reversals means we could see the Bitcoin going below the 100,000 once again, maybe even below the 75,000. So I don't think the peak was achieved. I think the ideal scenario here is we get one more or two more peaks, and from there, I believe correction is coming next. So that's it for this video. I hope you find the value in the opportunities and you find it interesting. If you have any questions, don't hesitate to drop it down in the comments. I wish you a wonderful trading week ahead, wonderful months ahead. I'll see you soon with more. Good trading. Bye for now.